Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. This is John O'Donnell. I'm setting in for Merlin, not only today, but it's going to be all this week. And I'm going to have a whole series of guests. We're going to call it Economics Week because I've reached out to some friends of Power Trading Radio and see if we can't bring in some economic wisdom to talk about what's going on in the world and perhaps even do a little bit of vision casting about what might the next year bring, that being an election year, of course. Our guest today has been on Power Trading Radio several times. His name is Dr. Mike Munger. He's a former chair of the Political Science Department at Duke University. He presently continues to teach political science, public policy, and economics there. He's a prolific writer, and the last time he was on with Merlin and I, we discussed his book, Is Capitalism Sustainable? And I thought we should kind of revisit some of the principles in that book. We kind of came to the conclusion that what Michael was kind of concerned about is that we might end up going the route of Argentina, which I thought was a very interesting comment. But before we get to Michael, TJ, can you pull up this image of an iceberg? So, Michael, welcome to our show. You probably can't see. I'm sorry?
It's a pleasure to be on the show. You didn't tell me Merlin wasn't going to. Who are we going to make fun of?
Well, it's recorded, so anything derogatory you would like to say about Merlin, it will be passed on.
All right, thank you.
But I love Merlin. I enrolled him in our school 20 years ago, so I have to hold him in very high esteem. He's become one of our leading award-winning instructors here at Online Trading Academy. I have on the screen, Michael, I think you'll enjoy this, a picture of an iceberg. And it would be a typical iceberg where about 10% of the total volume of the iceberg is above the waterline, very clear, very visible. But below the waterline is about 98% of the mass of the iceberg. And I throw this iceberg as an image for our conversation today about what I believe is a very important piece of information that's just not getting out as aggressively or as comprehensively as it should, which is how capitalism, and with all of its warts and problems, is still the best system that we have. And the amount of global poverty has been shrunk dramatically over the last 100 plus years. And most of that contribution to betterment is through capitalism. And I would like to say that the benefits of capitalism, especially for the younger generation today, is that whole component of the iceberg that's below the waterline, that if you haven't studied the topic, is just not very visible, shall we say, to the millennial generation on the benefits of capitalism and what it's done for society. So I thought you would be the best person that I could think of that could articulate, especially after you wrote that great book, Is Capitalism Sustainable? I want to make the case that I believe it is sustainable, but let's go down history a little bit and talk about the importance of capitalism to human betterment.
Well, let's take a step back. Throughout most of human history, the process of development was extremely slow, and the increase of income or wealth was glacial. So this actually is pretty close to your iceberg. It was as if it were frozen in ice. Human societies didn't change very much. And then somewhere in the late 18th century, a number of changes happened all at once. And we think of that as the Industrial Revolution. It goes by a number of names, but there's a famous economist by the name of Deirdre McCloskey, who has documented what she calls the Great Enrichment. And what happened is, in every country that used capitalism, so what's important is not the Industrial Revolution. That's the way that we make stuff. And Marxists, people on the left, they tend to emphasize jobs and like big steel mills as what wealth is. Wealth is stuff that you and I want to use. And so every country that used capitalism, starting in the 18th century, has had an increase in its wealth. And by wealth, I mean stuff for common people to use that is increased by a factor of 30. That's 30. So we're 30 times as well off as we were in 1780. And that had never happened before in human history. It took centuries to double. And in just 220, 230 years, we've had an increase by a factor of 30. And the only explanation for that is the application of capitalism. Because if you look at the countries, they had access to the Industrial Revolution. Russia, China, India, countries that for a very long time had access to the Industrial Revolution, and they had big factories, but they didn't have anything like that increase. So I think one of the most interesting natural experiments, and people will, a century from now, will look back at this. Up until about 1978, India and China, two enormous countries, the two largest countries in the world, had very similar, very slow growth paths. So it's a perfect natural experiment. In 1978, Deng Xiaoping introduced a number of reforms in China that moved it towards capitalism. And at that point, China immediately started growing at rates of 6 or 8% in real terms per year. So the proportion of Chinese citizens in 1980 who were at a poverty rate, at a general poverty rate, was 90%. 90% of the citizens of China were in abject poverty. And the definition of that is less than $1.90 U.S., defined in purchasing power parity terms. That is constant buying power, $1.90 per day. So China, by starting to have a capitalist system, and we'll talk more about that, there's some problems that are likely to happen in China because they haven't gone fully capitalist, because their ownership structure and their stock market is not capable of continuing to generate this. But from 1978 until 2018, the number of people in poverty went from 90% to 1%. And that's more than 1 billion people have come out of poverty in that time. So there's been nothing like it in all of human history. It's broad. And the thing that I think will be interesting to talk about, and we'll get to this in a while, is the conflict that we're starting to see between the concern for poverty and the concern for inequality. More and more people are worried about inequality. So I just wanted to lay out some issues at the beginning, and you can decide what we'd like to talk about.
No, I like that, and that brings up my next image, TJ, I'd like you to put up, which is an image of a fist, and on the fist is tattooed this message. And I think it applies to the success of capitalism, and the metrics that you just described are, as you so well pointed out, are just unbelievable. Never in the history have we seen success of this magnitude. It says, success is never owned, it is rented, and the rent is due every day. And I feel every day, especially as I graze over the news media, how capitalism and the principles of capitalism that built this wonderful wealth machine is under attack from multiple directions. And, you can pick your poison as to which of these you'd like to take on, but inequality is certainly a very, very big one. And I don't know if that bell is going to continue to ring and be accelerated. I expect so in the upcoming election year. But, you're the former, libertarian candidate for the governor of North Carolina, if I recall. But what do you think of that statement? Success is never owned. It is rented, and the rent is due every day.
I talked about this a little bit in the last time I appeared on the show, but let me briefly repeat something that I find interesting. Usually we say people on the left don't believe capitalism works. I think that's wrong. I think people on the left believe that capitalism works no matter what we do to it. That is, we can have high taxes on capital gains, we can have regulation, We can make it impossible for innovation to occur, and capitalism will just continue chugging right along because it's unstoppable. That's not true. We do have to pay every day. So I think your analogy is an excellent one. There's a bunch of things operating in the background that we just take for granted. So I go to the grocery store, and Walter Williams, the economist at George Mason University, says that consumers are really mean employers. They're really mean bosses. Because if I go to the grocery store at 10 o'clock on a Friday night and they don't have what I want, I fire them. I go to a different grocery store. And they don't know I'm coming. They don't know what I want. So consumers expect, and they actually generally get, these stores where a bunch of people are trying to anticipate what we want and make it good and fresh and low cost. That's operating in the background. It's not automatic. It's not obvious that that will always happen. And we've just seen recently in Venezuela where you start to mess with that, it disappears. Capitalism's fragile. It's not true that you can do anything you want and it'll just keep chugging along. Capitalism is actually pretty fragile. You have to make it possible for the rewards that entrepreneurs and people that are seeking profits, you have to make it possible for them actually to earn those things. That's what makes the system go. And so I think it's a terrific way of thinking about it. We are paying for it all the time, but it's because there are entrepreneurs who are looking for profit opportunities that are seeking out new ways to serve other people that makes the system work. If we stop that, if we do what many people on the left want and make it impossible for the stock market to demonstrate where the new profit opportunities are, if we regulate the price system so that it can't indicate where scarcity is, the system can collapse. And we've seen it happen in Venezuela. On the other hand, we've seen what can happen if you unfetter people's creativity in China. So it is absolutely, we have to pay for it every day, that's right, and we have to recognize that the system is pretty fragile. You can't just assume that wealth will continue to be created.
Well, that brings us to my next slide. TJ, let's put this slide up, which a lot of people are throwing barbs at the capitalistic system because of volatility in the capital market. And we're looking at a slide that is comparing the S&P 500 index, the New York Stock Exchange margin debt as a percent of GDP index, and we're looking at three bubbles that have formed. We're looking at the dot-com bubble that formed in 2000, that formed and burst. We're looking at the housing bubble that really peaked in fourth quarter of 2007. And we're looking at what we call the everything bubble today, which is a bubble in the bond market, specifically the corporate bond market. But, you know, we live in a world today, as you're probably aware, Mike, where $12 trillion of sovereign debt issued and outstanding, primarily in Europe and Japan, have negative yield. Our capital markets have never been in this condition before. And I don't think there's a central banker alive with their rash of PhD economic analysis that can figure out what's going to look like when that credit bubble unwinds, which eventually probably will unwind. I don't think it's going to just continue on at this particular state. What do you think?
Well, a number of economists have said that if something cannot go on forever, it will stop. And that's probably true of debt. I have to say, in 2011, 2012, I thought the rapid expansion of the balance sheet of the Fed would lead to inflation, and I've certainly been wrong about that. I thought it would start to lead to higher interest rates, and I've been wrong about that. The bubbles that you're talking about, volatility, one of the things that markets have some trouble with, and this is a little bit complicated, one of the things markets have trouble with is uncertainty. On the other hand, one of the things that many traders find useful is if there's enough uncertainty, then I can get to make bets in a number of directions. I can basically bet on volatility itself using derivatives, which means that a lot of smart people are diverting from trying to guess what assets, what economic activities are going to produce profits, to try to guess what government authorities, what stupid damn thing government authorities are going to do next. Because if I can anticipate that, I can make money by writing derivatives, by a combination of put and call options and other kinds of derivatives. So that what that means is our financial sector is being driven to find ways to make money on the unpredictability of government policy. Now, I don't blame the financial sector for that. I blame the government for having unpredictable policies. So the reason that a number of these bubbles have happened, and the bubbles have been so large, is that unpredictable government policy has led to basically artificial profit-making opportunities. And unsurprisingly, people have started, and I'm making air quotes, people have invested in them, but those are not real investments. So we have diverted a lot of the creative energy and the predictive power of capital markets away from what they should actually be trying to accomplish. So I find it frustrating when people blame capitalism for that, because what I see that is a period of regulatory uncertainty, when a number of experiments were tried, when the Obama administration in particular, it wasn't clear what kind of regulation was going to be imposed. And then the Trump administration, it's not clear what their foreign policy is. It's not clear what their trade policy is going to be. And the result is you're spending all of your time trying to lay off risk. You're trying to use derivatives to lay off risk. And you can make a ton of money if you guess right. But it's frustrating to see that the capital market system, the equity markets, have been diverted from their true purpose.
Boy, that's so true. You know, when that Fed blew up their balance sheet from roughly $3.8 trillion to $4.5 trillion, then they had some bit of a runoff. What they did was, by lowering interest rates so low and for so long, they chased the baby boomer saver and disincentivized savings.
Yeah.
And all they really did was push them out on the risk curve. Now, we have a for-profit private education company that owns Power Trading Radio. Our company has been the beneficiary of this because more and more baby boomers, I mean, the adult learner that we serve, I would say that the average age of our student is age 50. And they're coming in here over the last 5 years in droves, seeking alternatives because there's just no yield left, lending money to the bank and a certificate of deposit with 0.5% yield, and that they're at a chapter of their life where they desperately need income.
Right, and they would like income with less volatility, and they can't find that in money markets. It used to be you could get 3 or 4% on money markets. You can't get anything now. It's zero. So the other question that you raised that's really interesting is, why are so many people willing to hold dollar and euro denominated assets that have effectively zero real yield, and in some cases zero nominal yield? And so the zero nominal yield is always going to be a negative real yield. You're losing money by holding that. And the answer is it's a flight to some sort of stability. What you want to do is hold the underlying asset. And you're willing to pay to hold the underlying asset to insulate you from the volatility of other parts of the market, because the value of the dollar is not going to change very much compared to other currencies. So we talk about the problem with U.S. debt. We talk about the problems with the U.S. dollar. But the euro went through several crises there where it was just dripping Greece and Spain and Portugal. The problems that the euro has means is that there's been a flight to quality where people are willing to hold dollar-denominated assets. So the U.S. is like the town drunk that's walking along down the yellow line of the middle of a busy highway. And we think that we're okay. But if we stagger one little bit, if the euro becomes or some other currency becomes a currency people are willing to hold, or some other asset becomes something that people are willing to hold, people are going to start selling dollars. And if people sell dollars, then we're not going to be able to pay the interest on the debt. So for a little while, we get to be that drunk that's walking along the yellow line. But if we stagger in either direction, we're in for a world of hurt.
I got it. I do want to refer back to one chapter of your book we didn't get a chance to go into much detail on, but maybe you can elaborate it on, which is chapter 4. The best rules are those you cannot write down. So why don't you walk us through the thumbnail version of that chapter? I think you were referring to your dissertation advisor, Douglas North, in that particular chapter. Share with our audience what you mean about the best rules are those you can't write down.
Well, in a lot of cases, it's because the rules that we're all used to, that we understand motivate the system, are, let me put it this way, traditions, understanding that there are certain procedures, moral rules, those are things that we recognize as custom, as guiding us. If we have a rule that is written down, if we have a rule that's statutory, it can be changed. And so it's very frustrating to try to say this system is rigged to, I have to depend on what the legislation is going to be. Douglas North famously always said, after he won the Nobel Prize, he did a lot of consulting with third world countries, and they'd say, Professor North, you've won the Nobel Prize, what should we do in order to achieve faster development? And he would say the first thing you need is a different history. And the reason is the rules that are written down, Russia's constitution, Mexico has a great constitution that guarantees property rights, but actually the rules in Mexico are corrupt. India has rules against corruption, but the system, the actual system, is corrupt. So if you ask someone, how do I do business in Mexico? How do I do business in India? You don't need to go and look at the written rules. You don't look at the Constitution. You talk to businessmen in those countries and say, all right, how does it actually work? So in that chapter, I talk about the fact that a lot of times you have to try to figure out by using local culture how the systems work. And one of the most famous examples is the Pittsburgh left turn. And in Pittsburgh, it is illegal for a car to turn left in front of oncoming traffic, like most of the rest of the country. But in fact, Pittsburgh has a grid of small 2-lane roads, and there are no left turn arrows. So everybody knows if you're in Pittsburgh, and if you're going to turn left, the cars that are going to go straight, they will wait until the cars turning left actually make it. Now, that's a very efficient system. It's not written down anywhere. It's interesting, if you talk to people in Pittsburgh, they say, oh, yes, everyone knows that. But if you talk to a policeman, they'll say, yeah, actually, that's illegal, but it's okay. So the system is, because, if a car is going to turn left, it's blocking the traffic behind it until it clears.
Sure.
If you let the cars turn left, it'll go. Now, that's a very prosaic example, but a lot of the way that markets work depends on people knowing how the system works, of having experience, on looking at the ways to seek out new profits and new opportunities to use the price mechanism. It's very hard to write those things down. And so I think a lot of people are skeptical. You go to a business school, and we have in the CEO of a corporation, we can ask what were the actual rules, but what's more interesting, and I know that this is the sort of thing that you guys teach about stock markets and about buying stocks, what you have to do is have some knowledge of the culture of the corporation. You can do technical analysis. There's a lot of things that you can do to look for stock prices, but what may be more important is the rules that you cannot write down. And that's the sort of intuition that we're trying to develop in investors, is to understand the way the system works, not I'm just going to go look at the way the rules are written down and assume that that's the way the system works.
Got it. Well, our guest today has been Dr. Mike Munger, and he's written 2 fabulous books that I want to encourage all of our listeners to pick up. Would you suggest the best way to do that is to go to Amazon, or do you have another vendor?
Yes. Nope, certainly Amazon is the best, and if you have Prime, you get free shipping, so I can't match that.
Super. And it's wonderful stocking stuffer this time of year. One is Tomorrow 3.0, transaction costs in the sharing economy. We covered that on Power Trading Radio. It was very well received. And then the last one we covered when Merlin was here is a very important topic that I think all of us need to get our arms around. Is capitalism sustainable? And Mike, this is kind of a shot across the bow to all of us out there that are pro-capitalist, because as Michael so elegantly articulated, it has capitalism, more so than any other system imaginable, has lifted more people out of poverty across the world than anything else ever constructed. And we need to keep it going and flowing. And in this election year that's coming up, you're going to have one side of the political aisle that's going to beat the drum for more big government, less capitalism, more collectivism. And then you're going to have the other side of the aisle that's going to lean in the favor of hopefully more capitalism, although there seems to be not a very consistent pattern that the GOP is putting forward. What do you think about the upcoming election year? What are you forecasting we might expect from the debate that's going to go on, Michael?
Well, I found it really frustrating. I have a lot of friends who are Trump fans, and they'll talk about how he has done a lot of things in deregulation, in taxes, and I'll say, look, there's an entire body of thought here about freeing up markets. And in my view, free trade is a big part of that. Being able to get access to inexpensive foreign goods, particularly the things like steel and aluminum that are inputs that determine the price of a lot of the other stuff that we sell. So I worry that the Trump administration in particular has not been very good on free trade. I think one of the great things from my perspective that's happened is that a lot of my friends on the left, just because they're against everything that Trump does, have suddenly become free traders. So free trade is sort of back in vogue now among leftist academics. So that it's an ill wind indeed that blows no one any good. But I'm really surprised. Whatever you think of the merits of the election, I'm surprised at the choice of the Democrats to focus on going as far left as they possibly can and not lose, rather than try to choose a sensible centrist. Mm-hmm. And I never thought I would say this, John, a sensible centrist like Bill Clinton. Bill Clinton came into office, said we're going to have smaller government, we're going to deregulate, we're going to let capital markets work, we're going to cut taxes. So Bill Clinton, the Midwestern governor, I don't see anything remotely like him in the Democratic field.
Oh, no.
What I see is a bunch of people running to the left to see who can get the farthest to the left, and I find it terrifying.
Yes, and they seem to be in a real competition on who can give away the most stuff, and then claim that it's free. And I've always
and call it generous, and call it generous. I'm going to take money from A and give it to B, and I'm the one who's generous.
Involuntarily, of course. My father, who was a dyed-in-the-wool FDR fan, until I was able to turn him around in the latter stages of his life, but it was a bit too late. But he used to say, even as an FDR lover, he used to say, son, when somebody tells you something is free, nothing is free. You just don't. You haven't dug deep enough yet to figure out who's really paying for it. But nothing in this world is free.
Free tuition. We're gonna have so many free things. Vote for me.
Yeah, and the chickens will fall from the sky, already cooked. Won't life be wonderful? Well, thank you very much, Mike. Let's do it again. You have a wonderful holiday. I don't know if you've got any travel plans for this holiday. I'm sure out there in North Carolina you'll be blessed with some wonderful weather, let's hope. But from my family to your family, have a wonderful holiday.
And to you. Thanks so much. It was great to be on the show. I appreciate the chance.
Let's do this after the first of the year sometime. Our audience really enjoys your wit and wisdom on these topics, and we'll touch base again after the first of the year. How's that sound?
That sounds great. I look forward to it.
All right. We've been talking with Mike Munger. He's a professor of economics at Duke University. And he's written 2 wonderful books I would encourage you to embrace. He also has a beautiful website where it's michaelmunger.com, I believe, and where there's about 30 hours of webinar content of a collection of lectures he gives at Duke University to Duke undergraduates. And it's a fantastic combination of lecture, a lot of visual aids, and he's one of the most articulate libertarian spokesmen we have out there for more free enterprise, private property, the rule of law, the division of labor, the division of knowledge, the global division of knowledge. It's so important to global trade to improve the quality of life and enhance all this stuff that fits our needs for consumption. This has been John O'Donnell. Tomorrow we're going to have Jeff Deist. He's the Grand Poobah, director of the Mises Institute out of Auburn, Alabama. And we're going to go a little bit deeper into this topic. All this week, we're going to have some outstanding economists talk on these topics, and we're going to expand the scope of these topics. Tomorrow we have Jeff Deist. On Wednesday we have Dr. Mark Thornton. On Thursday we have Dr. Richard Ebling, who's a professor of economics at the Citadel University. And then on Friday we're going to have back for his 3rd interview on Power Trading Radio, Murray Sabrin. So tune in. This is John O'Donnell. Merlin is on a wonderful vacation this week. He'll be back with us after the first of the year. Peace. I'm out of here.